In this video, we will talk about Virgin Galactic. Before the video begins, if you like my content, please consider to like, comment and subscribe to my channel for more. Virgin Galactic has garnered significant attention in the stock market recently. Hedge funds purchased 2.5 million call options during the second quarter, making it worth examining the company's potential trajectory. Virgin Galactic stock is up by 1.55% in early trading, with a notable trading volume of 7.6 million shares compared to the average of 10.4 million. This increased interest may be attributed to the extended weekend, which allowed investors more time for research. As of the latest available information, there haven't been any new SEC filings or press releases since August 28. The most notable news is that the company plans to open the window for its third commercial spaceflight on September 8. Virgin Galactic is burning through a substantial amount of cash, around $125 million per quarter. Late 2023 expected to bring in only about $1 million in revenue. This raises concerns about its path to profitability, estimated to be around late 2026, which might deter some investors. Despite the uncertainty, some investors are optimistic. Around $93,000 worth of calls have been purchased compared to $29,000 in puts. This indicates a belief that the stock will rise, with predictions of it hitting around $3 per share by next week. However, options activity alone doesn't dictate the stock's direction. One analyst from Tricio Financial recently rated the stock as a sell with a $3 price target, supported by a 62% success rating. Analysts, in general, are cautious about Virgin Galactic's future, especially with potential interest rate hikes by the Federal Reserve. Based on recent data, the fair market value of Virgin Galactic stands at $4.11 per share. This information suggests some potential upside for investors, but it's important to remember that it's just one factor among many. The stock is currently trading between the S1 and pivot levels, with $3.08 as the next resistance and $2.39 as the support. While technical indicators suggest a bearish trend, there's hope that it might rebound. Short sellers have played a significant role in Virgin Galactic's history. The short score is currently 74, and utilization is at 81.8%. Short interest is increasing, with 726,000 shares added, indicating doubts about the stock's upward movement. There have been 26 million shares traded, compared to 30-day average volume of 14 million shares. In terms of the medium-term volatility, its share price fluctuated between $2.05 and $6.61 on a year-to-year basis. The traded share volume provides us useful information into market activity. It reveals the quantity of shares exchanged at a specific moment, thereby indicating the adequacy of liquidity to facilitate trading strategies. A low volume float can make the stock price susceptible to manipulation and also suggests that the demand can be low. Comparing prevailing volume to the historical average can also show us potential for trend reversal or breakthrough when a substantial difference exists. For instance, a stock breaking through would very often have much higher current volume compared to its historical average. The market cap of Virgin Galactic is currently at $840 million, compared to an enterprise value of $317 million in its enterprise value. The quick comparison between the market cap and the enterprise value often gives us an idea of whether the stock is trading at a premium or a discount compared to its intrinsic value. It is far from being a perfect measure, but it does offer us an idea of what the current momentum might be. A market cap that is higher than the enterprise value suggests that the stock is trading at a premium, probably because the market believes that the company can deliver in its promises in the future. On the other hand, if the enterprise value is higher than the market cap, then it is a sign that the company may have significant fundamental weaknesses or even solvency issues. When we look at the options market, the ratio between put and call options is 23%. 36,000 contracts have been traded within the most recent day, and over the past 30 days there have been 24,000 contracts traded. The options contracts can help traders to both hedge their risks and provide an additional revenue stream by selling them to others. The put options allows shares to be sold at a strike price, and the call options allow purchases at the strike price. They can be traded until the expiration date, and can tell us what the market sentiment is towards a company, although they might sometimes be wrong. When we look at the ownership structure of the company, 30% of its outstanding shares are owned by the institutional shareholders, some of the biggest institutional owners being Vanguard, BlackRock, and State Street. Typically, we would prefer to see institutional involvement if we decided to hold a stock for the long haul. This adds a level of stability and reassurance in the medium to long term. It indicates that the market believes the stock will provide value over an extended period, a crucial aspect for investors to weigh. In my view, a reasonable benchmark for institutional ownership would be in the range of 25% to 30%. However, it's worth noting that there are exceptions to this guideline, as some outstanding companies are predominantly owned by individual retail traders. Additionally, not all stocks are purposed for long-term investing either, making some equities worthwhile to be bought even if they have weak fundamentals and low institutional participation. Lastly, let's take a look at the short interest of Virgin Galactic. According to Fintel, the short positions take around 19% of the total floats, and 49% of the short transactions are made in the dark pools. Short interest is important in stock markets. It measures how many shares of a company are borrowed and sold by investors who bet the stock price will fall. When enough people do this collectively, the measure becomes a hot topic. Short squeezes happen when the stock price rises unexpectedly. Those who borrowed shares must buy them back at higher prices, causing more buying, raising the price even more. The theory is that this would force short sellers' hands and bring large profits to the long positions. Short squeezes aren't common. They need high short interest, which isn't always present. Market conditions, company news, or social media can trigger them. Some stocks also have protective mechanisms, like circuit breakers. Timing short squeezes is hard. Investors may lose a lot if they put their money on the wrong stock or at the wrong time. Risk and uncertainty are always there. Short interest shows the number of positions people believe that the stock will tank. Short squeezes do occur but aren't usual. They have been the exceptions to the rule, and not the other way around. Predicting them can be tricky, as retail traders are often too optimistic in calling them. Virgin Galactic is a volatile stock with conflicting data points. Hedge funds have bought a substantial number of call options, indicating optimism, but short interest is growing. Analysts are cautious, and the company's path to profitability remains uncertain. Investors should carefully consider these factors before deciding whether to buy, sell, or hold this stock.